Hey, welcome back. Today we're going to be doing a follow-up video to my dad investing strategy, which stands for dollar a day. Last year, July 1st, 2024, I decided, hey, I was new to the Robinhood platform and I wanted to do some exploring on it. And I also wanted to do like a little experiment just to show how easy it is to to get started investing. Robinhood talks about one thing that they do on their platform is that you can get started with as little as $1, and they do this by allowing you to buy fractional shares. And so what I did is I started my dollar a day investing strategy by buying a Schwab ETF, exchange traded fund, called SCHB, which is a broad market fund, and it's invested in a lot of different things. And so when I set up this strategy, and I'll link the original video below and link it up above so you can check it out. When I set up this strategy, I set it up so that my account would buy $1 a day, Monday through Friday. And then on Friday, it would make an additional $2 buy for a total of $3 on Friday for Saturday and Sunday. So I'm trying to invest $7 a day, $7 a week, not including market holidays. I started this July 1st, 2024. We're now in March. And so it's been a little bit over 8 months, roughly about 250 days. And so am I rich yet? Let's get into it and let's talk about what has happened over the last 8 months in this account buying $1 a day on the Robinhood platform for SCHB. I just wanted to give a quick disclaimer that the information shared in this video is for education and entertainment purposes only and is not financial advice. And if you have specific questions about your financial situation, you should consult a finance professional who can speak to your specific needs. So the first thing we're going to talk about is August 5th, 2024. The stock market had a very significant single day decline. But the thing is about a stock market decline, you don't know that it's a single day decline. You just know the market's going down and you hear the news and people are saying this and people are saying that. And so at this point, I was only about 35 days into doing this investment strategy. Thankfully, it was just a single day decline and then the market went back up. But that's part of riding the waves with the market. It's like it goes up, it goes down. That day, I was also on the phone with a client who was looking at starting to do investing, and he was very nervous. He's like, I don't know that I want to get in the market. And I was telling him, I was like, hey, on days like this, when the market goes down, things actually go on sale. The great thing is that the market was down that day. It was a Monday, and then it went back up. So whatever little I lost that day, the stock had pretty much, or the ETF had pretty much recovered within 8 days of that. So I have a little chart that I'm going to show right now. And so on August 2nd, which was a Friday, SCHB was trading right about 62.55 a share. Then the weekend happened, which is August 3rd and 4th. Then on August 5th, SCHB was trading at 59.94 a share, which is about $2.61 lower than Friday's. But then by August 13th, it was back trading at 62.70 a share. So within 8 days, the market had dipped and it had come back. Does it always happen like this? Can you guarantee that it will always happen like this? No, but it's part of riding the ups and downs of your investment journey. And this is why it's very important to understand what your risk tolerance is. It's great to take a risk tolerance questionnaire before you start investing so that you can invest inside of the guidelines of something that you're comfortable with. Because when we're looking at one share that's gone down $2.60, maybe that's not a big deal. But what if it were 100 shares or 1,000 shares and all of a sudden you have that $2.60 compounding over hundreds or thousands of shares? All of a sudden that turns into a lot of money, and that could be outside of someone's comfort zone. So you definitely want to make sure that when you're investing inside of your comfort zone. Another thing that happened on October 10th, and I'm going to have another thing pop up on October 10th, Schwab decided to do several what we call stock splits. So there's called stock splits with the SCHB ETF. And so what that means is so they did a 3-to-1 split. So that means for every one share, you get 3 shares. And so on October 10th, it was trading at 66.39 a share. And then they did a 3-to-1 split. So that meant for every one share, you got 3 shares that now traded at 22.13 a share when the stock split. So that's a 3-to-1 split. And another good question might be, why would they want to do a split? A lot of times when stock prices are high, sometimes companies will do splits to make it more appetizing to get in at a lower price. And so I was reading on an article that was talking about why Schwab was doing this. And they said one reason they were doing this was to make it so that financial advisors could employ this fund into smaller managed accounts. Also, to make it more appetizing for retail investors who are, a retail investor would be someone like you or me who is just going straight to a platform and looking to invest in a fund. And being able to buy one share of something at $23 makes it a lot more attainable than having it at 3 times that price. And the price point of this share is why I actually chose this one over other ETFs in its share class. When I was first planning of doing the dollar a day investment strategy on the Robinhood platform, I was looking at a broad market fund, and I looked at SCHB, and I also looked at a VTI, which is a Vanguard fund, and they're almost identical. I mean, there's a little bit of difference, but one thing is the VTI is a much bigger fund, and the VTI shares trade at, I have it right here, around the time I was getting started back in July 1st of 2024, VTI was trading at about $268 a share. But one reason why I didn't go with the VTI was because I was setting up this program, or I was setting up this challenge for people to start and go along with this, and it was for beginners. And if you're buying $1 a day at $268 a share, it would take us almost 9 months to buy one share. Whereas SCHB was trading right about $67, or it was trading at right about $62.97. So it would take us a little bit over 2 months to buy one share. And I figured it'd be small wins if we can make it just a little bit over 2 months to get one share. But now, since they did the stock split and it was a 3-to-1 and is trading in the low 20s range, every 23 days, 24 days, you can own a share of SCHB. And I just want to say right now, if you haven't gotten started on this stock market challenge, it's not too late to get your account at Robinhood. I have a link below. When you use my link, you'll get a free fractional share of stock. Robinhood will give you a free fractional share, and they'll give me a free fractional share as well. I don't work for Robinhood. I don't get any money for making this, but I just wanted to learn more about their platform, and I wanted to bring you guys along on this journey with me. Also, if you're getting some value out of this video, can you please hit that like button? Consider subscribing to Steadyworth. We bring content educating people just like you on tips and tricks on how to grow their wealth on a daily basis and how to live a life that they're truly passionate about. So getting back into it, something else that's significant that happened in the last 8 months was in November 5th, we had an election, a presidential election, and a president from a different party got elected. And a lot of times going into election cycles, the economy or what the stock market's going to do, it can feel a little bit shaky just because each political party has their own agenda or what they see as priorities of how they would like to deploy money and monetary policy throughout their term of the election. But the great thing is, once again, since we're doing this with SCHB, which is a broad market ETF, the fluctuations generally are going to be just in a few dollar range. So during the president election, and also even in the change of the guard or a new administration coming in, it still only shifted up just a few dollars. So the range really wasn't that bad. It wasn't too drastic. And this is one of the things I want to keep pointing out to somebody who might be nervous about stepping in or getting their foot into the stock market, is that, once again, you want to invest into your guidelines. But if you're investing in a mutual fund that has bought a broad range of funds, it's gonna just move with the market. So it goes up a little bit, goes down a little bit. And so it's a great way to get started. And so during the 8 months that I've had at SCHB, the lowest it's gone, and now this is adjusted for the stock split now. The lowest it's gone is $19.98 a share. And the highest it's gone is $23.75 a share. And so it's moved in that range, and it goes up and down. So as of today, when I checked my account right before filming this video, I have $238.10 invested in SCHB. And I'm actually, the fund is down as of today. And so I'm negative $3.17. And I thought I was going to record this video last week, and I was up $6 last week. And this week I'm down $3. But hey, that's part of investing, that's part of being in the stock market. It goes ups and down, and you just have to ride with the whole thing. And so the great thing is I saved $238 without even thinking of it, just by having $7 a week going into this account on an automatic draft, and it buying automatically. I didn't even have to think about it. And I mean, imagine what that could be for you if you're doing $1 a day or $2 a day or $5 a day. Just the automatic savings, what that can do to help you build wealth over time, it's amazing. Another thing, and I want to be clear, of course, that past performance is not an indicator of what will happen in the future. So whether this thing goes up and down, I can't guarantee what the next 8 months is going to look like, but I can tell you in the next 8 months, I'll still be investing because, hey, I want to be putting my money to work. I want to be deploying it and seeing it do something. And I feel, and it's also a great way of learning. I want to learn. And when I have a little bit of skin in the game, at least for me, when I have some skin in the game, I get to learn. But the great thing is about watching this channel, you don't have to have any skin in the game to learn. You can watch from the skin that I have in the game. So another thing is SCHB also pays a dividend. And so since it pays a dividend, it's just a little dividend, but also every so often, I'm not sure if it's quarterly. I meant to double check that, but since I've had it, it's paid 2 dividends, but I don't have a lot. So the dividends weren't a lot, but it puts a little bit of money in there. So, the money's making a little bit of money. You get a little bit of a dividend. So what I did want to say is that you can see it's fluctuated between, it's gone as low as 19, as high as 23 something. And you can say, is this really worth my time? Am I really going to make any money? And the thing is that you make the money, the wealth has grown over time in the stock market. That's what is shown in the past, is that, once again, in past performance, it can't predict what's going to happen in the future. But generally, the way this works is that you have to put money in and then it grows over time. And so I want to share with you another example of back when I was working at a job. This is back in like 2016, and I worked there from 2016 to 2021. And I was buying a different Schwab mutual fund in a retirement account. And when I first started buying that fund, it was $35 a share. And during the time I was there, I bought that fund between $35 a share and $50 a share over a course of about a 5.5-year period. And so the fund was slowly going up. But now over the last 5 years, the fund has gone up some more. And I was just looking at the fund the other day, and it's now trading at right around $100 a share. So that mutual fund also pays dividends. And so I get dividends, plus I've gotten capital gains in just what I bought, it at, because my cost basis for a lot of those shares are right in the $40s and $50 range. And now the shares are worth, like I said, close to $100. And so just getting in there, being consistent, you can see growth happen. You just have to get in there, and time is on your side, especially the sooner you start. As we wrap up, I just want to say, if you are interested in getting started today, once again, I have a link down below where you can set up your own Robinhood account. It will give you a free fractional share for joining. It also give me a free fractional share. We would appreciate your support with the channel. Once again, please like and subscribe. If you have any questions, feel free to send us a note, a message. We love connecting with people. Have a great day, and we'll see you next time.